Welcome back, ladies and gentlemen, to another video. And today we've got a lot of things going on in the news. I don't know when this is going to come out because I've been working a lot, I've been moving a lot, and I've been doing a lot of things. But we've got this in the news here, and I just want to maybe save the federal government some money. If they want, they don't save money. But anyways, I wanted to save them potentially some time, some money. Biden has requested an investigation into high gas prices. Obviously, this is not breaking news anymore. This is either November 19th or November 20th, whenever I actually get this out. But I just wanted to do my own investigation. But first, let's kind of look at the top line. And basically, this is what's going on. So there's either two ways that you can look at this. Either one, the current administration is very ignorant about how economics works. Or number two, the current administration is lying. The current administration is virtue signaling. And the current administration hopes that you do not understand economics. So that's what we're going to get into today. This is not going to be like rocket science or anything that's, way above people's heads. Like, the people understand this stuff, but I'm just going to lay this out so that maybe if one of them watches this video, assuming they're not lying, maybe they'll learn something new. I don't know. Okay, so Biden has asked the Federal Trade Commission to open an investigation into why gas prices are surging in the U.S. despite declines in the price of oil and unfinished gasoline, suggesting oil companies might be using illegal means to increase their profits. Okay, I want to key in on that profits later, but let's just kind of basically he's going in and he's asking, hey, why are these oil companies making so much money? Why are gas prices going up? I think they either, like I said, know the answer or they are lying to you. So let's talk about prices in general. We have to take a quick sidestep. We're going over here to PowerPoint. Everybody loves PowerPoint. Let's move me over here, move them up. All right. So, okay, talk about prices. So this is how prices actually work, all right? Like I said, this is not rocket science, okay? The seller is going to sell for as much as possible. The buyer is going to buy for as little as possible, right? We want to keep our dollars. The seller wants your dollars. The seller wants to give away as little as possible, right? That is a relationship, right? If people are free to interact in the market, that's how they're going to interact. They want as much for as little, okay? That's how people behave, okay? Prices, how they actually work, okay? So things that are for sale, as you can see, are the same things as things that are being purchased, right? So goods, services, which include people's labor and time, and dollars. So when you're buying something, you're not necessarily just buying something, you're selling dollars, right? So you can either sell dollars, or you could say, hey, I see that you are good at paintings, right? Or you have a painting, or you're a masseuse, or you can coach my kid how to play basketball. You got services. I've got dollars. I've got goods. Hey, how about, in a barter type system, you could say, I'll do some free dental work on you if you, I don't know, clean my house, right? So goods, services, that's how things actually work, right? So people agree upon terms and then they exchange. That's how things actually work. So let's take this to an extreme case, an auction, because right now we're talking about scarcity. So imagine you have an auction with 10 people and you have 2 items for sale. Who gets the items, right? So the obvious answer is the 2 highest bidders get the items, right? So in other words, the 2 people who give the most for those 2 items, whatever that be, whether that be services, whether that be homes, whether that be gold, whether that be dollars, the 2 highest bidders, according to the seller, get the items, okay? So, and then let's take another case. So you got 10 people and you got 25 items for sale. Who gets the items? Well, the answer is still the 25 highest bidders, right, for those items. So it could be one person, right? It could be that could be the case. In a free market, that's what would happen. The highest bidders would get the items, okay? So what if everybody only wants one item? All right, what happens to the price of the item? So either the price will basically decrease down to 0 as the person tries to offload the items, in which case, if this person was running some sort of a business, this person has overproduced and they overestimated how much they should produce for these people and how much they would want to buy these items, right? So their business should go under. But of course, in today's economy, we have the government bailouts, which are supposedly for the people, but they're really not, because you see what the effects are. You see that the wealth gap grows every time we get these huge economic stimuli. I don't know. Anyway, 25 items, right? You've either overproduced, you're throwing off the price system, or just the 25 highest bidders get the items, right? You can see those different outcomes, okay? I think we got one more here. Okay, so let's talk about gas prices, bringing it all together. 330 million people with an increased amount of dollars and X barrels of oil. Who gets the oil? The answer is the same, the highest bidders, right? And as we can see up here, increased amounts of dollars, that is the key component, right? So what are the people selling? The people are selling the oil company dollars. So the highest bidders, when people have more dollars, are going to bid higher. That means that the price is going to go higher. This is not rocket science, all right? But they're lying to you. Okay. This is a little bit of conjecture on my part. Obviously, this is not confirmed, but this has happened in other places. This has happened when they had oil shortages and they had price controls on gas, right? So let's say that you've got a little bit more production of oil, which we do have a little bit more production of oil, but demand has outpaced supply, right? That's exactly what the oil producers were telling President Biden, is that demand has outproduced supply. And why has demand outpaced supply? That's because we're increasing the amount of dollars in the system, okay? So who gets the oil? Under price fixing, okay? What you either get is hoarding, right? You get so many, everybody can afford the oil because there's more dollars than there are. For example, if you just hold the price down so low that everybody can afford oil, you get a bunch of hoarding. Or you get underproduction if you don't have a certain type of control. So people are not, let's say that they have to come in under their cost. It costs more to produce a barrel of oil than they can sell it for. So people will be disincentivized to produce oil, okay? Or if you get both, or just underproduction, right, where they have to sell underneath what it costs them to make it, you have forced nationalization, because there's only one entity that can run something unprofitably and continue to run it, and that is the government. Okay, that is it for that. We'll go back over here. So I'm just trying to run this investigation into high gas prices. So a lot of what you see from, these types is all of these emotionally charged words that really don't mean anything. And I just thought this was kind of interesting. You see things like wage slavery, which is a person dependent on wages or salary for livelihood. So basically that just means that, they have to work, AKA they have to actually help people around them so that they can have food and their necessities. They basically have to give people something. They can't just sit around and not do anything and have everybody give them something. So that is their form of slavery. But let's get into some of these terms. Operating profit. So operating profit is basically the amount of money that is left over from your core business, right? Your expenses and the amount of money that your core business generates, that is your operating profit. So what is your core business? If you're an oil company, your core business is selling oil. Your core business is not, selling a plant that you sold today, or some weird tech side business, or something that you own a stake in that doesn't sell oil, right? Your core business is selling oil. So it's how much oil you sold minus your expenses for selling that oil. All right, that's basically, if you're an oil business, that is your operating profit. Your operating margin is how much, operating margin is basically the percentage from your core business that you keep after all of your expenses are done. So this is the granddaddy. Hopefully you guys all made it to here, because now I'm about to finally make the point. Okay, the point is that if we really want to think about all these terms that they use, like wage slavery and all these other things, let me make myself a little bit smaller here. We should look at this chart. All right, so this is the operating profit of the S&P, okay? And I'm going to break this down by sector. So we're going to see what the most profitable sectors are in the S&P. So the profit margin of the S&P was 12%, okay, in Q2. So let's look at the most profitable and the least profitable industries. So we always see that healthcare gets a lot of flack. So they are at 8.8% profit margins, okay? They are lower than communication services, which is your Verizons, your AT&Ts, those people, telecom. Industrials, they're not making that much profit. IT, okay? This is, big tech, basically. You see they are making basically the most profit. So if anybody down here, financials, the banksters, they basically constructed this financial system and they are making the most profit. It kind of makes sense, right? They made the Federal Reserve and now they're making the most profit in this system, right? And when we start printing more money, if interest rates go up, they'll start making even more money. So if anybody's Basically what I'm saying is if anybody is guilty of wage slavery, it is information technology, which those people make a significantly more, they make a significant amount of money. So nobody would ever really accuse IT of wage slavery because those people are well off. But we go down here to energy. This is the granddaddy of them all. They're running at a negative, right? They're running at a negative profit margin. So the original claim, if we go back over here, was that there's an investigation into high gas prices. We went over here into my little PowerPoint and I showed you guys how prices actually work. Okay. Seller wants to sell for as much as possible. Buyer wants to buy for as little as possible. We talked about operating profit. All right. So it's basically the amount of money that is left after all of your expenses. Your operating profit margin is the percentage that's left over from all the revenues that you brought in from your core business. And then we see over here that the energy sector is negative. Okay, so if we lower gas prices any lower, it's going to lead to, basically it has to lead to the nationalization of the oil and gas industry because they're already running at a loss. So if they bring prices down any lower, they're just going to be at even more of a loss. If you can't operate at a profit as a business, you have to either shut down or you have to hand over the reins to the government. So what do you really think that this is about? If I would be surprised if he can't see that they're already operating at a loss. Is it virtue signaling? Is it lying? Is it genuine ignorance? Whatever it is, it can't be anything good. So hopefully you guys enjoyed this video. Give it a like if you did. And thank you for the 10K. I noticed that. I don't know if it'll be 10K after this. I probably offended some people with what I would consider not offensive content, but I'll see you guys in the next video.